What is going on, everybody? Welcome to another episode of the Rapid Review. Appreciate everybody joining live. As you guys know, chats are open both on X and on YouTube, so feel free to drop any questions, comments. If you agree, disagree, if you think what I'm saying is stupid, say it. That's why I like doing these things live. So I appreciate everybody joining. The goal of this is to go through everything that went on this week, which was a lot. Break it all down and get ready to trade for next week. We'll be going through everything that went on the overall market, sectors, industry groups, and then we could even get into some stocks. Get everybody ready to trade for next week. So without further ado, it's time for the rapid review. All right. You guys know the deal. There's the disclaimer. Read through it, but educational, informational purposes only. All right. Let's get started with the market trend. So my market stance, I have it in uptrend. With that being said, you'll see a little bit more of what I mean by uptrend when I start breaking down the overall market and my kind of stance. The way I look at the market is downtrend, uptrend, choppy, and with the follow through day happening, which I'll get further into, yeah, I have us as a uptrend. Exposure levels still early on. Still don't know if this follow through day is going to hold up. So we're going to be sitting at 20 to 40% is what I'm suggesting. Going down to the Webby trend. For those who don't know that, check out Mike Webster's YouTube channel. He breaks down the 3-day trend. What we're looking at right now is choppy on the S&P, choppy on the NASDAQ, but this could very quickly be switching into a uptrend. So good signs happening here as well. 50-day, my 50-day kind of trend analysis. We got sideways on both indexes. And then right now we were on the NASDAQ over 10% from the all-time highs. And we're 4.65 now, and the all-time high, we are 2.65% off on the S&P. So really, really strong week, big change from last week. So really, really good to see that. Now, in terms of the follow-through day, like I mentioned, we got the follow-through day on the 8th, which was on Wednesday, as the S&P basically gapped up and had higher volume, triggering that follow-through day. The NASDAQ, though, because the volume wasn't higher, we did not get a follow-through day, and we actually didn't get a follow-through day at all for this week. So NASDAQ's still on day 8 of the rally attempt, and we'll sit and see if we could have follow-through day come in the coming week. Index performance for the week, S&P was up 3.56%. Excuse me. NASDAQ up 4.68%. Dow up 3.04%. Excuse me. And the Russell Cap's up 3.97%. Really, really positive over here on the left side. On the right side, as we see that the closing range is really near the highs for the week. It's been now 2 weeks where we closed near those highs, and we'll look at that on the chart. 90% range on the S&P and on the NASDAQ. So super positive over here. And then over on the year to date, this was looking ugly for a while. But now we've seen those kind of losses really, really kind of reverse. And we got the NASDAQ down only 2.93%, S&P down 1.63%, Dow down 1.63% as well. Huh, that's interesting. Both those about down the same amount. And the Russell 3.80%. All right, moving averages. Big changes. Anything you see underlined has changed from the prior week. So you can see that we got above the 21 on the S&P, the NASDAQ, and the Dow. Super positive here. And then on the 50, even more positive here to see that because the 50 was even higher above. We got back above the 50 on the S&P and on the NASDAQ. Good ways off of that 50-day, 1.78%, which is positive. So now we're seeing green on the S&P and the NASDAQ and the Russell straight across the board. Very, very positive to see. Dow lagging a little bit. No surprise there. Style of growth stock trading. We're really more worried about the S&P and the NASDAQ. So really positive to go from a couple weeks ago, it was red across the board, now to green across the board. So good to see that there. All right, let's jump over now and take a look at what is going on with the indexes. We will start off as we always do on the daily on the Nasdaq. So we ended off last week fairly positive. The good sign, right? We had our day zero over here on that Monday. We had our day one of the rally on Tuesday, 3, 4, and that, sorry, 1, 2, 3, 4. So Monday was the first possible day, and we have this both on the S&P and the Nasdaq that we were able to get a follow through day. Um, Market kind of showed some resistance at that 21, both on Monday and Tuesday. But on Tuesday, we saw that positive reversal, which was really strong. We saw that we kind of rolled over intraday in the earlier parts of the day, found support at that 10-day simple moving average, and then rallied and then closed back above the 21. So even though we looked like we were kind of showing some resistance over here, that real positive reversal was something that looked super strong. But we still had that kind of concern of the resistance because that close was actually below Monday's high. So positive to see that we were kind of holding up on that rally. Positive to see that we were staying above that 21 EMA, but also slightly concerning that it just seemed like we were hitting resistance. So kind of a mixed bag of what we were looking at. Actually, I should throw this on. You guys let me know if this is easier. I don't even know if it's showing up on the screen. Little like dot. If this is easier to see, let me know. But so concerned to see some of that resistance. But the magic happened on Wednesday when we had obviously news driven action right after the close on Tuesday. News of a ceasefire happening and over with the U.S. and Iran, and the market just went on a tear. That held into the morning as the market opened, gapped up. Massive, big day. We gapped all the way up above the 50. What was really positive to see on this day, even though we didn't get that follow through day because the volume was lighter, it was above average volume, and this was also a pretty high volume day on Tuesday. So didn't qualify for a true follow through day, but still a big up day with tons of volume. Where am I? Right here. But what was interesting was the close wasn't so great, but then we also found support at the 50-day simple moving average, which was positive, but we were also starting to see some resistance at the January 20th low, which, as you can see with a lot of this clustering of price action around there, was a challenging area for the NASDAQ, right? We kind of rallied and rolled quickly back over here. We rallied up and then rolled back down again. And then we really met a lot of resistance at that level and then rolled over ultimately. So we kind of hit that resistance point again, which was slightly concerning, but at the same time, given the looking at the technicals and given of how big of a gap up that was, if it's going to pick a place for the market to kind of pause and the market to kind of see a little resistance, that would be, I think, where most people were guessing. But the big thing, seeing that support, the 50-day simple moving average, super positive. Thursday, we basically opened flat and then kind of rolled over, found support again at the 50-day simple moving average and rallied again. You could see over here on Thursday, right? We have the close 22,822. And then the high 22,821. So we just squeaked above the high. But for the most part, we were like kind of still seeing that resistance again at the January 20th area. And that continued today. That continued into today, which was Friday, as we opened. And we'll actually bring up the 15-minute here. So you can see we opened, we kind of rallied into about the first hour or two, and then we kind of rolled over and then stayed pretty flat. We were only up 0.35% today, so somewhat of a flat day. But given the move, so though we haven't seen a ton of like strength after the gap up to the upside, and we've basically been in this kind of flat, tight area, just the fact that we didn't roll over, right? Just the fact that we can gap up and then gap back down, and we're seeing the support at the 50. We're seeing a little tighter price action, less volatility. Super, for me at least, I think this is very positive to see that happen because a lot of times when you get these big gap ups, when the market is kind of really consistently in that downtrend, it gaps up and then it rolls right back over. And the bulls did everything to prevent this market from rolling over. Just not enough power coming into the upside. So yeah, good overall, good action for the week. The big thing, right? We got the follow through day signal. So Bill O'Neill used to say, you get a follow through day signal, and we'll talk about really. Here, let's just click here. So here we are on the S&P. Similar action, a little bit stronger as we got above the 120 low, but you can see a little bit kind of the opposite where we're finding more support at that 120 low on the S&P and then rolled and broke through, and then now we're back above it. So a little bit different price action, but still seems like we had a little bit more power over here. Flat still today, not as strong of a day on the S&P. But this was that follow through day because we had the above average volume, but the real thing was the volume was higher than the prior day on that big gap up. So that's what gave us that follow through day signal. And what I was saying was Bill O'Neill used to say, if you get a follow through day signal, he would force his PMs to put some long exposure into the market. There's a big psychological side of that, right? Very often when we get these follow through days, it is happening when people feel the worst, when the market feels horrible, it feels like it's just going to keep going down and going down. By always trusting that follow through day signal, even though they can fail, and making some sort of long purchase, you're making sure that you don't let your emotions play into the market and you don't poo-poo a follow through day only to see it go higher. So very, very important. I myself always follow that rule. If I get a follow through day, I am buying something. Common question, right, is, well, how do you know it's a follow through day if you may not be able to tell how the volume is going to close? There are ways to look at it, different ways to kind of run rate or relative volume to see intraday if volume is trending in a higher direction. For me, I was kind of just looking at it and it was kind of like, all right, we had such a big gap up on both these indexes. The likelihood that one of these is going to be on higher volume was pretty obvious in my opinion. So yeah, I made a purchase and went about 18% to the long side. Yeah, so going into next week, and sorry, I know that was a lot to break down. Hopefully that kind of helps explain how I'm looking at the market. But yeah, going into next week for the NASDAQ, really, again, keeping an eye on that 120 low. That's the first area that I want to see us go to the upside. Taking out over here, which is the February 25th high. Again, more and more positive the upside. And then from there, it's really just looking at those all-time highs right around this 24,000 kind of flat number, which is also those big round numbers, also a area where the market sometimes either sees resistance, or if we break through, that's a really, really super positive sign to break through on the upside to that round number. The downside, really, really simple: 50, 200, 21. In that order, three most important moving averages that I'm going to be looking at, and pretty much the exact same on the downside of the S&P. But then obviously ultimately looking at that rally low if we were to break lower than that. I don't think that if we break the low of the follow through day, that it's a crazy negative signal, right? It doesn't necessarily mean that we're just going to go straight up from here. We may pull back, but we just want to start seeing the opposite of what we were seeing on this side. We want to start seeing, rather than lower lows, lower highs, we want to start seeing, can we make higher highs and higher lows? And really the 21, stay above that. That's one of those big line in the sand for me. All right. That is all we have on the indexes. Let us jump back over and let's take a look at what was going on. Top-down analysis, that's the way I like to do it. Let's look at what's going on in the sectors. This is my little sector dashboard. Makes it very easy for me to look at tons of data. But really, let's look at things from a weekly perspective. Tech, super, super strong this week. Has transitioned into that early stage uptrend, stage 2A uptrend, if you're somebody who follows Stan Weinstein. Very, very positive action here, leading out the week, which was a good sign. And we'll look at over on Deepvue. We'll take a look at kind of these charts quickly as well. So that tech really being the standout for the week, but you also see industrials, consumer discretionary, which is another bullish sign to see that doing well for the week. So again, really, really, really strong week here. Sorry, I want to backtrack real quick. Actually, I didn't look at the weekly to show you guys, but right, very, very nice. Closing near highs, rallying up from here. Volume on the weekly, not super strong. Do remember that on the last week, that was a holiday week. And this week, very, very strong, higher than last week, which is, expected. But the whole week, not super, super heavy on the volume. But with that being said, if we are going to stall and we're going to stall around here on heavy volume, like right these 2 days, to me, that's not positive. So the fact that we stalled on Thursday and Friday and that was done so on lighter volume, positive action in my opinion. All right, let's get back over to the sector dashboard. Energy getting crushed, right? Energy was leading kind of the bear market or the downtrend that we were having. So seeing that kind of turn around also in the opposite direction is somewhat expected right now. Other than that, yeah, I mean, you can basically see this is just the inverse of what we've been seeing. We were seeing energy doing really well. Utilities was also doing pretty well. Utilities actually holding up fairly well this week, despite the market turning around and it being kind of second to energy. But yeah, let's see if we can continue to see this trend in this direction, the same way we're going to be looking at the overall market. Industries. So here's I've designed, this is my personal industry groups. I have 166 groups. I spent a ton of time building out these groups. And the main goal that I had to building out these groups was I wanted to update normal like subgroups. When you look at what's out there in the regular market from, I think it's like GICS, they're kind of dated, right? They don't really hone in on like semiconductors, but like what groups within semiconductors and some of these new innovative sub industries. And as a growth stock trader, that's where I want to focus. I don't want to know just semis are doing well. I want to know specifically what's really outperforming within these sub industry groups, within semis, within AI and things like that. So spent a lot of time taking a ton of stocks and divvying them up and organizing them in 166 different groups, and then doing a weighted relative strength or really weighted performance over 3 months, 6 month, 9 month, and 12-month time frame to develop my ranking system. You can see right here, AI, data center, networking doing very, very well, leading right now. And then you can see these are the names that are actually causing that move. But then I also have secondary exposure because there are some stocks like NVIDIA, GWL, I don't know very well, but that's, I guess, in the fiber optics area. That will also see secondary exposure to that. So these two names are not necessarily calculating this ranking, but I like to be able to see that there is some secondary, I should probably pay attention to some of these secondary exposures as well. So yeah, again, these are, I'm sure many people see AAOI on there, LITE, two big popular names, clearly leading right there. Second, we got the memory stocks. Everybody knows those. These also standing out. SanDisk, full disclosure, I do own. That was the stock that I bought on that follow through day. So these two groups are really standing out the most. And from what I hear from a lot of people on the follow through days, this is where a lot of people kind of put their exposure. Other than that, going down here, yeah, I mean, you guys can kind of see what's up there. Oil and gas still floating around up here because they've been so strong. So it will take some time for them to kind of flip around and change if this uptrend does continue. And this one, space economy, is the other one. See the velocity score. This is how many spots this thing has jumped. This has been one of the, this is a little green ticker I got right here. This has been one of the stronger moving names too. And if you wonder, well, what the hell is space economy? These are some of the names. You could screenshot that, throw those into your watch list. All right. This is leaders. This is just for today, but let's look at leaders for the week. Semiconductor equipment, semiconductor memory, crypto mining. Crypto mining names doing very, very well. So that's another area of strength. That we have the AI networking. So you can see a lot of AI, a lot of tech, and also still having some of those rare earth minerals, copper miners, things like that. HVAC, thermal, data center cooling. I group these together because a lot of these HVAC and thermal companies that maybe weren't traditionally tech companies, tying into the data center AI cooling as well. So, and then you can see the top 5 losers for the week. Software has just been super, super weak. So you're seeing that happening throughout here: coal, oil and gas, and stuff like that. So, a lot of people are probably just seeing this in their day-to-day screening and just watching of the market, but this to me just makes things a little more stand out. And then our rapid movers, a lot of names kind of moving around, jumping around. You can kind of take a quick look at that, but yeah, that's what we got there. Let's see. Oh, distribution days. I didn't go over this before. This is all those old days. We haven't had any distribution days since we've had the follow through day, which has been a very, very positive sign. And we saw a ton of days drop off naturally, which is a very, very positive sign. You can see this week, 3 on the S&P dropping off due to price action, 3 dropping off due to time, and then 2 price action and 2 time on the NASDAQ. And next week, we're going to be losing a day on each of these due to time as well. So really, really light. If we don't gain anything, we'll finish out the week very likely with possibly no distribution days if we have a decent week on any of these indexes, which is very, very positive to see. News next week, we have just PPI on Tuesday, nothing else there. And we are getting very, very close to the earnings as well. So you can kind of see that over on the screen too, a bunch of different names reporting, and this is the criteria that I'm looking for that pulls this. So we'll see this kind of build up. The big names I think that really stand out over here. Netflix is obviously a big cap name that has a lot of move to the overall market indexes. We got some banks reporting. Financials were starting to show some strength this week. That's really a lot of financial names kind of reporting next week. All right. Let's jump over to Deepvue. For those of you who don't know, I am a Deepvue partner. This is the tool that I use for all my stock screening, chart analysis, looking at fundamentals. Really, really strong, powerful tool at a price that crushes pretty much everybody in the market. If you are interested in checking out Deepvue, link in the description and link on my bio on X. And new free trial code that I have. I don't know if I put it in the descriptions. But it is P2P, Papa 2, the number 2, Papa, Path to Profit. So it's P2P. And then free, capital F, month, capital M. And that'll get you a free 1-month trial. And then you guys know I also have the descriptions, the 12% off of an annual membership. So here looking, just kind of continuing with looking at what was going on the industry group side and themes. Again, Bitcoin miners, semiconductors, those are the 2 big standouts for me this week. And again, semis has been showing, we kind of talked about last week how semis was showing strength. So we're starting to see that the 1-month time frame, the 3-month and the year to date. This stuff we're going to probably start to see rotation if the market does turn around. But I think the big thing standing out is really the semiconductors for sure. I think that's where a lot of people are focusing their buying. ETF tracker. So I also like looking at charts, looking at what's going on in ETFs. So we'll jump over here and just see quickly on the RS on the 1 week. Again, Bitcoin mining. So this is something that I like to just put in context, like the Bitcoin mining stuff. It is still turning around in an overall kind of downtrend, choppy sideways action here, still turning around. You can see that same thing there. Blockchain, But this was the one that really stood out to me, right? The semis just ripped with that follow through day, and broke out to all time highs, and then kind of continued. Little weak of a close for the week, for the day on Friday, but for the week, like just look at that power, super super powerful. Would have liked to see more volume, but and you have another semi one here, seeing similar action right there. Bitcoin, copper miners, right? We talked about that a little bit before. Copper miners starting to show some positivity, but at the same time, it's still got to kind of prove itself. Blockchain, Brazil, hydrogen, and yeah, that's really all I'm going to add over there. And this is Deepvue's industry group rankings. They actually do a pretty good job on the breaking down of these. But what I like here is you can see these different time frames. So in the 1 month, you can see textiles. So that's a lot of your consumer discretionary stuff. We're starting to see strength. What else stands out? Semiconductor materials over here. Tech distribution. And let's go over here real quick. And then these little numbers, you can see how many big these, like the banks made a big jump. Anything else? Anything else? Yeah, so this will probably take a little bit of time as things start to rotate, but yeah, this is what we got here. All right, let's jump into some stocks. So SanDisk, right? I told you guys I had let me open right layout. Where's this? My right layout? Nope, that's not it. All right, this is it. All right, so we saw that this was one of those names that was clearly a prior leader that was really holding up in this market, and I was very focused on watching this name. When it broke out here, the market just was not in good shape. And for me, I know that sometimes stocks can break out and the market's not doing well, but the probability is against us. So I've talked about why I kind of, whether it was this double bottom, whether it's somebody looking at the all-time highs, whatever kind of pattern you were looking at, I just kind of sat out. And the market just, what it does very often, took it down. And despite how strong this was, despite how there was not a lot of selling really coming into this, and this was holding up and bucking the trend, the market still got to it eventually. But when we had the follow-through day over here, basically what I was just looking at for people who are just kind of curious, right? We had these all-time highs here. I consider this kind of like a false breakout, pullback. We broke out 2 all-time highs. I didn't buy right off the open because especially on those big gap ups, I saw a lot, especially last year, where the market would roll over. When you bought within those first few minutes, it kind of crushed you. Where are we? Like right here. Right? Is that the 9th? Nope. Here. So I was very patient. I kind of sat, waited. And what I actually looked at, though, I'm not a day trader per se, and I don't trade a ton on intraday charts unless it's really gap ups. And we saw the gap up, we saw this kind of pullback, and then I saw this kind of get pretty tight right around here. And then actually, I think this was probably right about it at that like 12 o'clock time frame where I just saw this ton of price action that was tight here. And I saw this bar kind of pop, and that's where I made my buy. And the low of the day at that time was where I was looking at as my stop, which I was able to get under a 5% stop. And I didn't use my normal full size position. So I was able to keep my risk very low on the entry. And again, knowing that it was likely we were getting that follow through day, I wanted to make sure I was getting in something that I thought was a leader. Higher ATR name, so something I had to be careful with there, but that's why I like that gap up as a place to kind of put my risk. And then it kind of moved up throughout the rest of the week. Looks like it kept moving post-market today, which is nice. Good to see there. But that was what my follow-through day buy was. A lot of other names doing well, though. Where are we at? Taiwan Semiconductor, a name that I've been kind of keeping an eye on as well. Problem with this one is we got earnings in, very shortly. What is The 16th is that Wednesday? Wednesday. So too close to earnings for me to make any sort of a buy, which is why I kind of ignored this one. But still a name that I am watching closely. What else we got? I got to update these watch lists. Some of these names. Fastly got crushed today. Crushed today. I wonder what was it? So, okay, this is what's sick, right? I'm curious why it got crushed, but this is what is nice about Deepvue. I can actually click on this bar. Oops. Make sure I click on the right one. Ask Deepvue AI. And it is going to calculate. This is why I love Deepvue. Didn't have any major events or announcements based on available market data. No earnings, no filing, no stock moves, closing activity, partnership. All right, so nothing specific. So, yeah, interesting to see that. A lot of times they'll tell us if there's stuff going on, if there is some sort of market news that led to that action. It is a high ATR name though, and it did find support at the 50. So still going to keep an eye on this one. Doc was DigitalOcean, another one that got crushed today. We'll refresh there. Another one. Let's see if that was also just a market. My mouse is shaky. There we go. See what they say about DigitalOcean. But yeah, market acting really, really strong. So this is the time on this weekend you should be heavily screening, looking for buying opportunities. Don't chase anything if it has gone on without you. Let's see. Recent activity. Doesn't look like anything. So looks like the market just kind of, these guys were holding up. Another high ATR stock though. So, but in that SanDisk kind of realm, we're seeing that whole group, right? We kind of saw that when we were looking at over in my industry group rankings. You got Seagate doing well. You got Western Digital doing well. And MU got hit the worst of all of them, which is why I had no interest in buying this and focused on SanDisk because I felt like that was the leader. But this still starting to kind of move up the right-hand side as well. So something to keep an eye on. Nobody, I see you guys watching, but nobody's dropping any stocks. If you guys want me to pull up a stock, let me know, and I will pull it up, and we'll break that down as well. What do we got here? Space Mobile, been kind of keeping an eye on this. Another super high ATR stock, so really, really trying to find a nice tight area. Finding support at those moving averages, which I kind of like that we once we've kind of bottomed, we'd start to climb up, and now it looks like we're starting to hold up above those moving averages, but we're still in this kind of sideways range. Like even if you just look around that area, how many times it's just rejected and bounced, kind of a little bit of floor here with maybe a shakeout. That's really a lot of how my technical analysis goes is I'm looking at support resistance areas and keeping things very, very simple. All right, cool. We got some names dropping in here. So I don't have to keep going through these. Actually, I just want to look at BE. BE looking very, very strong right at those kind of all-time high area. Again, as you can see, I got a lot of high ATR stocks on here. But you know, look at that. That's it. That's deep. That's deep. So this is a little too extended for me, a little too fast of a mover. I'm hoping maybe this tightens up right around those all-time highs. I'm going to be keeping an eye on this one as well. All right, cool. JC, what do you got? We got, where am I? Let me click this so I don't start drawing all my charts. AMAT, this is another one. So look at this. Yeah. Breaking out to all-time highs, looking at this pattern, that gap up on that follow through day, you probably could have did the same thing that I did with the gap up on, let's just see. 1, 2. Yeah, you probably could have did the same thing on the gap up here. I just want to see. Let's just say you bought even here. Yeah. Even if you bought towards end of day. I mean, even if you're taking out those highs. Yeah, so even if you're super patient and said, I want to see us take out what was the, 65-minute high, that would have been, I think, a really, really smart entry. If you're very, very patient, waited towards the end of the day, saw it start breaking out. Am I right in saying that? Did we break that out? Oh, no. All right, actually, even better. So the next day, you saw us break those highs, and then you had that really, really tight stop at the, well, not really tight, but a good stop at the gap up lows. So that Thursday really could have been a really nice entry to get in on this one. For now, though, now we're kind of somewhat extended from here. So if you bought this once, I mean, yeah, I see what you were looking at. I think this was a great follow through day or follow up buy after the follow through day. So beautiful. Proving the point when people are like, oh, I didn't buy on the follow through day and now I missed everything. Like, there are always going to be names. If this market keeps going, there'll be plenty of names. Believe me. RDW Redwire. I don't know this one. Why don't I know this one? Smaller name. All right, that's why. High ATR. Everything's high ATR. Everything's moving and grooving. All right. My concern with this one. Smaller cap name. Obviously, we keep talking about the high ATR, and I can't even use that as an excuse because obviously I bought some high ATR names. But like, it's still kind of in a downtrend. So for my style, I want to, I want to see a little bit more of, like, I guess you could say this is the first possible higher low. But this is a name that I would just be patient personally. I like that's an IPO, younger name, but it's a little smaller. 1.53 billion. What's the average volume? I don't have it on this one, but yeah, not my kind of trade, but that's all I'll say about this. Just not my kind of trade. I'm trying to think of some of the other names that people have been talking about. Discord. Anybody got anything in Discord? Nothing here. Let's see. Again, chat's open. Oh, everybody over on X super quiet. Nobody wants to drop any stocks. People talking about MU. Oh, that's a good one. Another semi. Marvel. So this is another one that's tough because it just ripped very quickly. Maybe if you're able to, even here, if you buy here, yeah, like that's just. Oh wait, I'm on the weekly. Okay, even clearer. Like, this is just so extended, right? So extended, massive D space, but it's right at those all-time highs. Right at those all-time highs. So I would hope that this would kind of pause and give a secondary kind of entry, maybe pull back a little bit, get real tight, form a short little bottom over here, like almost like a giant, like this giant pattern, giving you like some sort of a handle on it, and give you somewhere to kind of assess your risk. But this is just gone way too rapidly, way too quick, and not something that I would be interested in buying. But something that I think needs to definitely be watched. And look, we very likely, when I was talking about what went on with the overall market, we very likely in the beginning of next week could have some sort of a pullback. And I honestly welcome that pullback because it could help with a lot of these names and giving us places to assess our risk too. What else? People talking about Dell. Dell's been another one that a lot of people have been talking about lately. Similar, right? Similar action, right? It's just hard to really put a good stop in on this name. So right at those all-time highs, hopefully this can kind of consolidate a little bit and give it a little bit tighter of an entry, some nice tight price action that'll help assess some risk. I'm not looking back here because for me, we didn't get the follow through day. The market is a downtrend. I wasn't very interested in putting long exposure on a lot of these names, especially this deep inside of a base, especially coming out of like for those follow through days. Like I'm trying to buy what looks the strongest, and very often that's those stocks breaking out to all time highs. As I get further along in an uptrend, I'll be more interested in buying more swing trades inside of a base where I can have a really, really tight stop. And then I could probably peel off some of my exposure going into what is a possible resistance level. But really on those follow through days, I'm looking at what was the strongest and what was holding up the best. And very often those names are breaking out to all time highs, which is why it can sometimes also be difficult to get a very, very tight stop on some of these names for sure. So Mod was another name brought up. All right. If nobody has anything else, this will be the last one I do. But at the end of the day, you should be heavily screening this weekend. All right, nice little pattern over here on the weekly. Right, another one right at those all-time highs. Yeah, so this one, given like that gap up, if you look at that gap up low, a little bit more reasonable area to draw a stop to. Nothing like in the double digits. Still right now, almost getting to my max 7% range. But one of those names. This is those automotive names. All right, so this might have been one of those. What do they do? What do they do? EX Deepvue. Click. Nice and easy. I tell you, it's really nice to not have to leave one of my browser screens and then Google it and then search, or even go to another AI and just be able to click and get it. Design, engineers, test, manufacturers, thermal managing products, heat exchangers, radiators, cooling, vehicle stuff, indoor air quality. Okay, so this is probably popping, even though it's in that automotive set. Like this is probably popping more for the data center stuff and the AI and the semiconductors versus for vehicles. Though I'm maybe in the east side of things. All right. So let's cap this off. We'll just talk about. All right, going into next week. So we had a strong week. One strong week doesn't mean that we are completely out of the woodwork. We talked about some of the areas we were seeing resistance. We talked about some of the areas we were seeing support on the overall market. And overall, things looking good, things looking healthy. Just the fact that Thursday and Friday we followed up without rolling underneath the 50-day simple moving average. Super, super positive action. We're seeing some names break out. We're seeing names continue to move. We're seeing strength in those semiconductors and a lot of those tech names. So overall, things looking very, very positive to the upside, but still earlier in the uptrend, we want to see some more follow through before or at least I want to see some more follow through before I'm really willing to bump up my risk. Like I said, I have my risk levels at 20 to 40%, at 18-ish percent, 19-ish percent exposed right now. 18, 19, I'm right around that 20. I haven't gone above that just because I was trying not to chase too many names, and that's kind of what's put me in the lower end of that. But yeah, I'm going to be doing some heavy screening this weekend. Really, really look for what's holding up what's performing well, what's giving some good tight entries, and what's really leading this market that can give me an opportunity to get into it. And hey, look, if this does fail, if the market does roll over from here, that's why we have stops. But things right now are telling us we should be buying some names and allowing us to slowly increase exposure if the market can continue to prove itself. If you are a doubter, if you're somebody like, this is just like a whatever rally, this is probably going to roll from here, just understand that very often in these markets, I've seen it many times in these kind of pullbacks, corrections, downtrends, whatever you want to call in the market, when there seems like everybody's like, this market's just, I don't trust this follow through day. Very often when people are talking that way, the market just rips. And if you need a little help thinking positive, listen to some Jim Ropel some Jim Ropel podcast. That'll get you all amped up and thinking about the future of the world and what that means in the market. So yeah, slowly increase exposure. Let's see if this market can hold up, continue to follow through, really focus on those leading industries, leading groups, which seems to really be a lot in AI and the semiconductor areas. And just make sure you're disciplined in your entries. You're not chasing anything, and you know where you're going to put your stops. You have a logical reason why you're putting your stops and what that means for not only the risk on the position, but the risk on your overall equity. Um, because even if you have a logical stop, but you put just a massive position on, you may be risking way too much of your overall portfolio's equity on a single trade, and doing that for longer periods of time, though it may work out sometimes over a long period of time, it's going to make things hard. It's going to make things difficult for you to outperform the market and to have some nice big years. So that is all I got. Appreciate everybody. It's definitely fun doing these live right after the market close because I'm kind of digesting everything with you guys versus when I do it over on the weekend. I've kind of done a little bit of my work already. So hopefully you guys find this helpful. I like sharing my top-down analysis with everybody and helping people to just digest what went on during the week so we can get ready to trade for next week and know how we should be approaching the market. So that is all I got. Thank you, everybody, joining live. If you jumped in, because I know a lot of you guys jumped in later, I'll post the YouTube link, and you guys could watch at your leisure, jump around and go through different parts and see everything from the full video. And again, if you're watching this for the first time, I do this every single week, normally on Fridays or Saturdays, and same format every single week, top-down analysis, and then always chat's a little light, maybe because it's on Friday, but always answer a lot of questions, pull up any stocks anybody wants to talk about, and try to make this more of an interactive thing. So also 50 episodes. So super stoked about that. Almost coming up on a year. And that is all I got. There's the YouTube link. There's the X link, depending on what platform you guys are watching on. Link in the description of the YouTube for the Discord channel. Very, very close to about 1,400 growth stock, CANSLIM, Minervini, swing trader, position trader styles in there. Super stoked about everybody in that community. Really, really, helpful people, and people who treat everybody with respect. And I think you guys make all the groups. So for those of you that are watching from Discord, huge shout out to you guys. And it's free. I don't charge anybody for anything that I share in the market. I'm not somebody that's at that level. I'll be honest. I'm still learning myself, still trying to improve. So just want to share my thoughts, and this all helps me get much better as I have to verbalize what I am thinking about, what I'm seeing on the charts. So again, appreciate everybody.